banking or IT, where should you invest in 2024? An intriguing question, isn't it? Welcome and thank you for joining us on this journey as we dive into the world of investments. Our focus today is on two powerhouses of India's economy, the information technology sector and the banking industry. Both sectors have their unique strengths, challenges, and potential for growth. This exploration is not just about comparing numbers, it's about understanding the underlying dynamics that drive these sectors. It's about making informed decisions that could shape your financial future. Remember, investing isn't about following the crowd, it's about finding the right fit for your portfolio and your financial goals. So, let's get started, shall we? In the next few minutes, we will dive deep into these two sectors and understand the potential they hold for investors. First, let's explore the Indian banking sector. Nestled in the heart of the world's fastest-growing major economy, the Indian banking sector plays a crucial role in fueling India's economic growth. It's a vast landscape, home to a diverse mix of public sector banks, private sector banks, foreign banks, and a recent wave of digital banks. Among the key players in the arena, we find the likes of HDFC Bank, ICICI Bank, State Bank of India, and Kotak Mahindra Bank, each bringing a unique proposition to the table. HDFC Bank, for instance, has built a strong reputation for its customer-centric approach, while ICICI Bank is known for its extensive range of products and services. The recent trends in the sector have been equally intriguing. The advent of digital banking and the increasing influence of fintech have transformed the traditional banking landscape. Today, customers can perform a wide range of banking operations right from their smartphones, thanks to digital banking platforms offered by banks like HDFC and ICICI. Moreover, the Indian government's push towards financial inclusion has led to a surge in demand for banking services in rural and semi-urban areas. This has further broadened the horizons for banking institutions in the country. However, the sector isn't without its share of challenges. Rising non-performing assets, or NPAs, have been a cause for concern. In addition, the sector has been grappling with the need for technological upgrades and enhanced cybersecurity measures. There's also the challenge of meeting the evolving customer expectations. Today's customers demand seamless, round-the-clock banking services, and meeting this demand often requires significant investment in technology and infrastructure. Despite its significance, the banking sector faces several challenges, but it's these very challenges that often pave the way for innovation and growth. So as we move further into the 24th year of the 21st century, it would be interesting to see how the Indian banking sector navigates these challenges and shapes the future of banking in India. What are the challenges faced by the Indian banking sector? A key issue that continues to plague the Indian banking industry is the burden of bad loans. Non-performing assets, or NPAs, have been a persistent problem. Banks lend money with the expectation of a good return, but when borrowers default, it becomes a bad loan. This not only affects the profitability of banks, but also their ability to inject fresh capital into the economy. Next, let's look at profitability. Indian banks have been grappling with low profitability due to a variety of reasons. High overhead costs, low interest rates, and the burden of NPAs all contribute to this. Despite efforts to digitize and streamline operations, the costs of maintaining physical branches and ATM networks continue to eat into profits. Regulatory hurdles also pose significant challenges. The Reserve Bank of India, or RBI, has been tightening regulations to ensure stability and transparency in the banking sector. However, these regulations often mean additional compliance costs and a slower pace of business. For instance, the recent mandate to link loan rates to an external benchmark has put further pressure on the bank's margins. The Indian banking sector is also grappling with cybersecurity threats. As digital transactions increase, so does the risk of cyber attacks. Banks need to continually invest in robust security systems to protect their customer data and maintain trust. But this, again, is an additional cost that affects profitability. Another challenge that can't be overlooked is the competition from non-banking financial companies, or NBFCs. These entities offer similar services but with fewer regulatory restrictions, giving them a competitive edge over traditional banks. Lastly, the ongoing economic uncertainty due to global events like the pandemic has added another layer of complexity to the challenges faced by the Indian banking sector. These challenges have an impact on the returns for investors. While the banking sector continues to be a cornerstone of the Indian economy, these challenges must be addressed to ensure a healthy and profitable future. Now, let's shift our focus to the Indian IT sector. The Indian IT sector has been a leading player on the global stage for a while now. It's a powerhouse, accounting for approximately 8% of the nation's total GDP. This is no small feat, considering the sheer size and diversity of India's economy. The sector is home to some of the world's top IT companies. Infosys and Tata Consultancy Services, or TCS, are household names, not just in India, but around the globe. They have set the gold standard for IT services, providing a wide range of offerings from software development to business process outsourcing. Their reputation for delivering high-quality services at competitive prices has helped them secure a strong foothold in the international market. But it's not just the big players that are making waves. Smaller IT companies and startups are rapidly emerging, bringing innovative solutions to the market. They're pushing the boundaries of what's possible, harnessing the power of cutting-edge technologies like artificial intelligence, machine learning, and data analytics. One of the most exciting recent trends is the surge in digital transformation. Companies across sectors are realizing the importance of leveraging technology to streamline operations, enhance customer experience, and stay competitive in today's fast-paced digital world. This has led to a significant increase in the demand for IT services, propelling the sector to new heights. The Indian government has also played a crucial role in the sector's growth. Initiatives like Digital India and Startup India have provided a conducive environment for IT companies to thrive. They have facilitated easier access to funding, provided tax benefits, and encouraged innovation and entrepreneurship. However, it's vital to remember that this growth has not been without its challenges. Issues such as data security, talent acquisition, and regulatory compliance continue to pose significant hurdles. Navigating these challenges requires strategic planning, robust management, and a constant focus on innovation. The IT sector, while promising, is not without its own challenges. What are the challenges faced by the Indian IT sector? Navigating the dynamic landscape of the IT sector is akin to sailing in stormy seas. The rapid pace of technological change is the first challenge that casts long shadows. Cutting-edge technologies such as artificial intelligence, machine learning, and blockchain are no longer the future, they are the present. The IT sector needs to stay on its toes to keep up with these developments. The need to constantly innovate and adapt is vital, but it can also be a significant strain on resources. The second challenge is the need for constant upskilling. The Indian IT sector has a massive talent pool, but the skill sets required are continually evolving. Upskilling and reskilling have become the order of the day. This constant need to stay updated with new technologies places a considerable burden on both the companies and their employees. The third challenge comes from the global arena. Indian IT companies are not just competing with each other, but also with global giants in the United States, China, and Europe. The competition is fierce, and the rules of the game are continually changing. Global economic fluctuations, trade tensions, and regulatory changes can all impact the Indian IT sector significantly. Moreover, the IT sector is not immune to the universal challenges of business. Market volatility, economic downturns, and fluctuating client demands can all pose significant hurdles. And let's not forget the ever-present risk of cyber threats and data breaches, which can lead to severe reputational damage and financial losses. Despite these challenges, the Indian IT sector has proven its resilience time and again. It has been able to transform challenges into opportunities thanks to its robust fundamentals, innovative mindset, and strong growth potential. These challenges notwithstanding, the IT sector presents an interesting proposition for investors. The key to successful investing in this sector lies in understanding these challenges, picking the right companies, and maintaining a long-term perspective. The journey may be a bit bumpy, but the destination promises to be rewarding. Having understood both sectors, how do they stack up against each other? Let's start with the return on investment or ROI. Traditionally, banking has been considered a safe bet with steady returns. Banks like State Bank of India and ICICI have provided consistent dividends over the years. However, the ROI has been relatively modest, often struggling to keep pace with inflation. On the other hand, the IT sector has been a high-growth industry. Companies like Infosys and Tata Consultancy Services have not only provided impressive dividends, but also considerable capital appreciation. Over the past decade, their stock prices have grown manifold, delivering a sizable ROI to their investors. Next, let's consider the risk profile. While the banking sector is generally perceived as low risk, this isn't always the case. Indian banks have grappled with issues like non-performing assets and regulatory challenges, which can pose significant risks to investors. Moreover, the advent of fintech companies is disrupting traditional banking models, adding a layer of uncertainty. Contrastingly, the IT sector, though not without its risks, appears somewhat resilient. The demand for digital services is booming, and Indian IT companies, known for their cost-effective solutions, are well positioned to capitalize on this trend. However, one must also consider risks like technological obsolescence and intense competition in this sector. Finally, let's talk about growth prospects. The banking sector is largely dependent on the broader economy and interest rates, which can be quite unpredictable. Meanwhile, the IT sector is riding on the wave of digital transformation sweeping across industries worldwide. With the increasing adoption of technologies like artificial intelligence, cloud computing, and data analytics, the future of IT seems bright. While both sectors have their merits, the IT sector seems to edge out banking for investors in 2024. The potential for higher ROI, a relatively resilient risk profile, and promising growth prospects make it a more attractive investment destination. As always, it's prudent to diversify your investments and consult a financial advisor before making any investment decisions. So, where should you invest in 2024? Banking or IT? We've journeyed through the complexities of the Indian banking sector, examined its challenges, and weighed the opportunities. We've also traversed the dynamic landscape of the Indian IT sector, scrutinized its challenges, and highlighted its potential. After this thorough analysis, the pendulum seems to swing in favor of the IT sector for investment in 2024. Let's briefly revisit our key insights. The Indian banking sector, though robust and integral to the economy, is currently grappling with issues of non-performing assets and stringent regulatory norms. These challenges, while surmountable, do cast a shadow of uncertainty over the sector's immediate future. On the other hand, the IT sector is riding the digital wave, bolstered by a global shift towards digitization and automation. The demand for IT services is burgeoning, and Indian IT giants such as Infosys and TCS are poised to seize this opportunity. Despite challenges like data security and skill shortage, the IT sector's future appears bright, making it a more attractive investment prospect. A preference for IT over banking for investment in 2024 isn't a dismissal of the banking sector's potential. It's recognition of the IT sector's robust growth trajectory, innovative spirit, and ability to adapt and thrive in a rapidly evolving digital world. However, it's crucial to remember that investment isn't a one-size-fits-all proposition. What works for one may not work for another. When investing, consider a multitude of factors like your financial goals, investment horizon, and risk appetite. Diversification is key. Having a mix of different types of investments can help reduce risk and increase potential returns. So as we stand at the threshold of 2024, armed with insights and understanding, the choice is yours to make. Will you ride the digital wave with the IT sector or navigate the currents of the banking sector? Remember, every investment decision should be based on careful analysis and understanding of your own risk tolerance. Happy investing!